Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. I'm very excited to introduce our guest today, Eric Tomaszewski, who's a financial advisor at Verde Capital Management and very much focused on Bitcoin and cryptocurrency. So we'll be getting into all the details related to that today. Eric, thanks for joining us.
Thank you for the opportunity. Happy to be here.
Absolutely, absolutely. So to get started, can you tell us a little bit about yourself, your company, and how you got involved with cryptocurrency and Web3?
Yeah, absolutely. So starting off, any statements or opinions shared today are my own and don't represent Verde Capital Management or my fellow team members. That said, as you alluded to, I'm a financial advisor with Verde Capital. Think of us as a boutique advisory firm. We manage in excess now of 550 million in assets, and we are an RIA, or could also be perceived as a fiduciary, where we are tasked with working with clients in their best interests. And our mission is very much about tying money and especially tokens to life fulfillment. We do that by educating clients about their money, guiding them to make more informed decisions, and helping them grow in all aspects of their life. That said, the crypto journey was pretty unique, but not necessarily that atypical. Back in 2016, we have a client that came to us, as most clients would, where they said, "Hey, I typically bring things to you that I want you to research and to tell me if it's a good idea or not." We had an individual client that came to us and said, "Hey, I came across this thing called Ethereum. And I don't know enough about it, but I want to task you with the research." That was my job. And I spent several hours that night and could not fall asleep. Woke up the next morning still thinking about it and had the epiphany at that moment in time of, why are more people not really talking about this? What am I missing? Because this seems revolutionary. And that started the entire journey, from then eventually getting our team on board with an understanding of this space beyond just Bitcoin, but also Ethereum and other tokens and ecosystems. And then from there, accelerating and getting client exposure in different forms, and eventually diving further into the weeds on DeFi by jumping into Discord, jumping into voting, jumping into Twitter or X, and really being a part of these different communities, understanding how they operate, and then deploying.
Very interesting. So you were kind of a rarity when it comes to financial advisors, where you kind of saw the writing on the wall early on and committed to learning about it and advising your clients on it. So I think that's really interesting. I took the same approach from a CPA perspective at Camuso CPA. So it definitely pays to be early in this space and grow with the learning curve of this industry. So
Absolutely.
you mentioned a little bit about your responsibility as a fiduciary. Can you touch on that a little bit and how that differs from other types of financial advisors and roles that are offered to people?
Absolutely. And this is a world, when we look at financial services, it is very cumbersome. And for most people who are even in the space of financial services, things could be quite confusing. So at a very high level, how I like to describe it is, imagine if you have a road and then there's a fork in the road, and you can go in either direction. Doesn't mean that one is better or worse. It just means that they're different. And if you went in one direction, that's about 90% of our industry. 90% of the industry consists of brokers or people who are insurance people. That could be, if you're going to, and to name a few, going to Merrill Lynch, Bank of America, going to JP Morgan Chase, going to Fidelity or Schwab, directly going to a Robinhood, going to a Northwestern Mutual, and then the list goes on. All these different firms that we see on every corner, every commercial, every slogan. Now, it should not be as much of a surprise that that is really what consumes most of our space. That said, why is that different? Well, they are structured in a way where they have to work for a client by basically giving them something in a commission basis. So they would sell some form of product and or service and make a cut. But for a number of reasons, that could create some unintended consequences. So on the other side of the street, the other fork in the road, you go in the other direction, is what we do. We are that 10% part of this sliver that works as fiduciaries, or RIAs, which stands for Registered Investment Advisors. Legally, I can call myself an advisor, whereas brokers or insurance people technically cannot. In addition, we are held to the highest standard within financial services. Not my opinion, it's the legal verbiage that oversees us. I have to work in a client's best interest, very much like a doctor would have to work in a patient's best interest when it comes to their physical health. So that's quite important. I think very revolutionary for when people are deciding who they want to work with in some form. And I guess to sum it up, clients come to us not for a stock or token pitch, but more so with overall goals that they're trying to achieve for themselves, their family, and so on and so forth. Investments are just a part of that we try to fit into it.
Absolutely. That fee structure and incentive structure, I think, is extremely important. And I always encourage clients to, seek out fiduciaries that are seeking to help align their advice with their best interests, just like you explained. So tell us a little bit about, your guiding philosophy when it comes to helping clients achieve financial security, and how does that shape your daily practices at your firm?
Yeah. So the guiding principle is to very much work in someone's best interest so they can be the best version of themselves. It's that simple, but that is very effective. It's making sure that we can harness every aspect of what we do to make sure that you can be the best version of yourself for your family, for what you are doing with work, and so on and so forth. A way that I like to describe it is we have all these different human needs. We have to be intellectually growing, spiritually growing, physically growing, and so on and so forth. All these aspects that make us human. We want to look at financial advising in a very different perspective where it's beyond just let's pick an investment, but let's more so look at every aspect of your life and make sure that you are being fulfilled. And if we do that, we feel as though we're accomplishing our ultimate goal. And going back just briefly, that very much also ties into that whole concept of fee structure. And one thing that might not be obvious that I want to allude to is when you go to a broker or an insurance person, there's that cut, there's that commission. They get paid up front without knowing if they're actually going to work as hard for you over time. For fiduciaries, what is typical and how we approach it is it's a fee-based approach. We are charging as a percentage of assets. Why is that relevant? Well, it's relevant and important because we are always needing to be accountable to working our butts off for a client, not just for this day or tomorrow, but every day, because I am always held accountable. So if we're making smart decisions and portfolios are going up, client is happy, and from a fee structure, our overall pay is also going up as just a percentage of those assets. On the flip side, let's say there's risk in the market, there's a recession, there's volatility, and we're not being quick enough to move and make decisions on your behalf to work in your best interest. Not only are clients maybe irritated if money is lost or money is going down in the short term, but think of it from my vantage point. I have a family. I am competitive. I do not want to go home with a lower paycheck. I am incentivized to make sure that I am being as nimble as possible, because if I'm not on top of my game nonstop, then I will see a reduction in my pay that month or that quarter, which I definitely don't want to see.
Absolutely. Absolutely. Yeah, I totally agree with that. So, and something that you're probably dealing a lot with your clients and in your practice is helping them deal with all this market validity from, like an advisement perspective and even like a psychological perspective. And, I'm speaking towards just general markets, and obviously, the validity is highest in the crypto markets. So, how do you help them when you're dealing with those periods when you're seeing a lot of validity, especially when it's to the downside, and sort of helping them maintain a longer term perspective and a focus on their long term financial goals? How have you approached that?
Yeah, no, that's fair. It's really important for someone in my role to make sure that I'm listening more than I'm speaking. So listening, being empathetic, truly putting myself in someone's shoes, having an understanding of where they might be without judgment, but truly taking into account where they're at in their life, I think is the most crucial part. From there, when we're looking at things tied to volatility or the unknowns and the unpredictable things, everything goes back to education. There's a reason why a part of our mission is education guiding and growing. Education is the first principle, and it's because it's the most crucial. I think that's one of the biggest gaps for most people, where there's a disconnect with how things are reacting within a portfolio, how they're doing personally or professionally. It's education. So this ties into things in our world to risk scores and prospect theory. Just know that this is a way to look at risk tolerances from a very different perspective. So in the past, it was typically, if you're young, be aggressive. If you're old, be conservative. If you think about that, that's really generic, really basic, and a little bit ignorant, if I could be so honest. When we look at it, we use things like prospect theory that puts a heavier emphasis on how people look at things from an emotional standpoint, with wanting to evaluate gains and also avoid losses. So when we have risk scores, we will actually go through a number of different questions and scenarios when we work with any client, as we start with them, but then also as the relationship evolves, to be able to look at their speed limit. And think of it as an example. If you and I were in a car, you're the client, I'm driving the car, you're the passenger, you get to dictate how comfortable you are in telling me what speed limit is your preference. If you want to go 60 or 70 miles on the road, or in your portfolio, our job as the driver managing that portfolio is to make sure that we are aligning it with that, to where if you said 70, I better not be going 40, because I probably have too many low risk oriented investments. But if you also said, Eric, go 60 and I'm going 80, I'm going to shock you and be away from your expectations. So education is core, but it's also having the right type of technology to look at what someone's risk is and to account for that over time.
Absolutely. That's a great perspective. So then how do you incorporate these emerging assets like crypto into, a traditional financial plan for a client? And also, I guess a follow-up to that would be, how do you sort of address these things, such as like the security for the custody of those assets and things of that nature?
Ask the question once more, if you don't mind. Sorry.
Sure, yeah. So I guess the first part of the question, maybe we'll start there, is
Yeah.
how do you incorporate, cryptocurrency and other emerging assets like this into a traditional financial plan? I think to a certain degree, we're going to have to go back to the risk profile of the client, like you were saying, but are there any other considerations around that?
This is a little bit of a loaded question from the standpoint of every individual client we see is different, from a risk standpoint to their educational standpoint to demographically where they're at, and then also goals and priorities. As an example, I could have two clients that are 35 years old, both have spouses, both have two kids, both make the same amount of income, but their willingness for risk could be vastly different. Their portfolio construction could look vastly different, and how we achieve those goals could be very different. With what we do, it has to account for the two different sides of our mind, where there's one that is analytical and it's going to be financially driven when we're making decisions, and there's the mathematical side, and there's also the other side where it's the emotions. And sometimes that could actually have a bigger bearing for someone's mind over decision making. And ironically, that is also okay. It's never our job to tell a client what to do. It's our job to be able to throw everything out to them as some potential solutions for them to optimize their situation, to make it simple to understand, and then from there for them to be able to make a decision that's best for themselves and their family.
Absolutely. Absolutely. So you were very early to realizing, what crypto was going to do to the financial world, including financial advisors. And obviously, I think that's a trend that's going to continue to a large degree. It's something I've basically bet my career on. I believe you have as well, to a large degree. Is there any other like trends that you're seeing overall in financial planning today? Is one of them going to be that we're going to see, many more advisors start incorporating cryptocurrencies into the financial plan? Are there any other strategies that you're seeing from a diversification or asset protection standpoint at all?
Absolutely. So to that point, alternatives broadly has been more of a focus in strategies and diversification. And let's pinpoint specifically digital assets. Let it be Bitcoin or Ethereum that have been around the longest and do naturally get majority of the attention. If it's that, or if it's diving further into the rabbit hole, I think that'll become more and more notable. And it is. You've seen family offices, institutions, RIA firms, advisory firms like ours, have the ability to be nimble and adapt and want to incorporate that for a number of reasons: diversification, risk management, getting access to a unique ancillary asset class that acts very differently by different mechanisms versus, let's say, the traditional stock or the bond. And I do believe you will see more of that as we're seeing some of the biggest traditional finance firms that advisors and brokerage firms do look up to, being the ones to say, from an educational standpoint, on TV, in research notes, et cetera, that you should be watching this. You should be a part of this. We will give you easy accessibility to it. So alternatives isn't obvious. I would say beyond that, it's a focus on technology that builds a picture for, how do I say this, for seeing everything that's impacting someone's life. So going back to education, but also optics, you can't really plan unless you have goalposts, but you can also see every aspect of the picture. So I think more and more technology, like what we even use now, is being able to see assets, liabilities, goals, priorities, in a way building technology in a personalized website for clients that is easy to access, but allows them to see every picture of their life, and also can make it easier for other professionals that they're working with, from individuals like you or estate planning attorneys or other attorneys. Could be mind-blowing. I think you'll see more of that. I think you'll see more of the shift away from, we're going to be your broker and, hey, let's give you a stock or a token tip. We're away from that. That was many decades ago, and we've gotten further and further from that. I think you'll see more of that as goal-based financial planning. What we started with at the onset of our practice, and that we'll continue to do, is making sure that we focus on how do we prioritize investments, but then also specific types of account structures and strategies for different goals that some people are achieving. I could have very different strategies for a client, sometimes 3 to 5 different strategies, because they're earmarked for different types of goals. And then I would say lastly, things like index investing. This has been around for some time, but it's important to know that this is, in some respects, the future. It is much more about, if we think about markets broadly, it's very difficult to always pick the latest, greatest investment. That is so challenging, even from the most eloquent and intelligent stock pickers and token pickers of the world. We believe that it's more appropriate for broader access to do that through index funds, which by design allows you to have access to the market broadly versus try to time the market, which is a challenge.
Definitely. Very interesting. So from your perspective, we've seen crypto and Web3 evolve immensely over, the time span that we've spent in the industry, but particularly over the past couple of years. I believe we've seen a lot of maturity, a lot of more movement on the regulatory front, a lot more professionals getting into the space. Mm-hmm. What do you see this evolving into over the next few years, and where what do you see as the next big shift in this space, or the next big next level to this?
Great question. This one is challenging because things move so quickly from every spectrum to where it's tough to always gauge what the future may look like. And if I'm being honest, I don't know if I would have looked at the space in 2017 and 2018 and thought truly we would be where we're at as of today, for good and bad. So I think that's a challenge, but if I had to put my finger on it, I would say, especially since 2022, which we shall not talk about, we've had a lot of mature, sophisticated developers basically putting their heads down through that time frame and beyond, and being very serious about working on projects, and even, as you're seeing with a number of projects that have been around for years, recreating some of these different protocols and even chains to adapt with what we're seeing from users and what is maybe needed from the market. So I think you'll see more and more of that adaption. I would also say, tied to sort of the regulatory front, what has been most notable and obvious to me, with me even going to an event in downtown Detroit to be a part of some of the things that are tied to like lobbying, it's the emphasis on lobbying with governments. We saw an amazing amount of support, especially over the last number of years, but especially leading up to this election. which I think was the US market saying we need this to be taken seriously. We have to work with government in some form and make sure that they are on board. It's not by surprise that many of these conferences that used to be in the US were going overseas. If they're being honest, they would say because they were concerned that there wouldn't be as much adoption in the US. That is now shifting because of what we're seeing from the political side. And I would say another big shift is putting more of blockchain tech underneath the surface and creating, let's call it a smoother user experience, better interfaces. That has been worked on for some time, but is not where it needs to be. That'll be continued. And then with some of the topics that we've seen take the world by craze with the likes of NVIDIA and Apple and the whole concept around tech, but even more specifically with AI, I think you'll see more integrations with AI and specific projects and protocols. I do believe that we will see chain consolidation. I was recently on a tool called DeFi Llama, which I've been using for years. Love the data points. But what's interesting is when you look at chains, there's well over 100. I think I got to about 200 and I stopped looking. There's too many chains out there. The reality is not all of those are going to exist in that current form. They will either gobble up or go away. There are going to be a select few that actually stay around and will have different use cases, in my opinion. And I think that is also overall healthy. The larger ones that have the scale will probably be the ones that last. Also regulatory friendliness that allows for more adoption to ensue. I think when we're now seeing the fear that many people had with how things were being run by the SEC, but then also the administration broadly as it related to crypto, it was not always positive. We saw a campaign being run for single issue voters where Trump was making it very apparent that he was going to support this and make sure that it was supported here in the US market. There's not a surprise here that the market is running up so quickly. We've been under resistance levels for Bitcoin for quite some time. The reason we shot through levels like 70,000, ironically, right around the time frame of the election, is because the market took a lot of what happened with this red sweep. If you love that it was a red sweep or not is sort of a separate topic, but knowing that that occurred has been deemed positive by the market. And to that point, breaking overnight $100,000, which is just remarkable.
Absolutely. It's a beautiful thing to see after all these years, for sure.
It really is.
So how do you view the relationship of, DeFi and traditional financial institutions? Because obviously, as we start to come to the next stage of maturity, do you think there's going to be like integration between the two, or is there just going to be more divergence and they're going to sort of stay separate? How do you think about that?
Yeah, I've thought a lot about this and trying to sort of hear the views of people who are within the world of TradFi, which I am that TradFi guy in some respects. I love the world of DeFi, but I'm still TradFi. And then also speaking with individuals who don't have necessarily that finance background, but started as teenagers or 20-year-olds working for specific projects as a developer and getting their viewpoint where some of them have been concerned. I think broadly speaking, I do view it as favorable. I think it's a very favorable thing that will be positive for the overall market. I do see more integration as there's been beyond clear messaging and build out of digital asset ETFs. We have these SMAs or separately managed accounts through different organizations tied to centralized exchanges, getting in a way closer to that self-sovereignty that a lot of us fell in love with. And you're also seeing a number of integrations with stable tokens and even DeFi. You look at some of the news from some of the biggest names, from Van Eck to Franklin Templeton to BlackRock to Fidelity. If you watch that news closely, they are doing a number of things when it comes to stable tokens, with money market on-chain issuance, with their roadmaps. If you really get into the weeds on them behind closed doors, it is remarkable with their knowledge base within this space, understanding also tokenomics, but how they want to be very much a part of this space, to not bunt heads, but to very much be working within DeFi for the purposes that all of us fell in love with it.
Definitely. Well, Eric, this has been a great conversation so far. If you were, talking to financial advisors or even other financial professionals, because, we'll have financial advisors watching this. We'll also have
Mhm.
CPA, CFOs, all these different types of
Right.
professionals. What Obviously, this is a learning curve that they need to address as a financial professional.
Mhm.
So, what strategies or learning resources would you recommend to them if they're trying to build up an expertise in crypto?
Okay. I took a unique journey through it, but from what I've learned is exposing yourself to more uh, is always going to be advantageous. So, some examples: regularly reviewing industry updates. There's a number of different websites out there that provide information and optics that I think are helpful. Going into specific sources like DeFi Llama or Token Terminal to understand more about fundamentally what's happening with tokenomics, but also getting easier access to the different uh, channels to be able to communicate with the individuals who are tied to these projects. Uh, get out of your comfort zone would be my advice, to basically go through and meet them in the communication method that they would prefer and just pose questions. You might be shocked by how much you can find by just asking very direct questions to protocols. Beyond that, it's attending crypto and blockchain conferences, from the consensuses of the world to the ETH Denvers of the world and many of the others. Engaging in networking with crypto professionals on LinkedIn or even local meetups. I'm in Metro Detroit. I go out pretty routinely to meet with people who are within this space in downtown to be able to connect, hear what's happening, and to be a part of that community. You learn a lot through those interactions. It's being able to meet people like you at conferences, right? That's how we met, and seeing your information through like Twitter channels and basically reaching out and saying, hey, let's dive into the weeds together. And then beyond that, going through and maybe even getting designations. There's a number of designations that are out there. One that I would say is highly regarded is the DACFP, which is the Digital Assets Council of Financial Professionals, which in essence was started by one of the largest and most innovative RIAs via Rick Edelman, that shifted into the world of digital assets and cryptocurrency for the purpose of educating advisors. And I would say that's a great start, and then the rabbit hole will take you.
Definitely. And it is a rabbit hole. And, there's no sort of cookie cutter way that you're going to be able to learn crypto. So I think that's great advice. You need to build a deep network of professionals that are in
Mhm.
this space and be taking information basically from every source that you can and just start to build a new mental map of this industry. And the challenge is that it's always changing, but that's also the fun part of it as well. So, Eric, I really appreciate you taking the time to speak with us today. It was a great conversation. It's very insightful. To everyone that is out there watching this, I hope you took some value from this conversation. Eric, where are the best places, if people want to get in contact with you personally and reach out to you just to have a conversation or possibly to discuss working with you as a financial advisor? Where's the best place for them to get in touch with you?
Yeah, I love that. So we'll meet individuals through the channels that they prefer. So you can find me on LinkedIn, Eric Tomaszewski, tied to Verde Capital. You can get us at verdecm.com to reach out to myself and our team directly via our website. My email is eric@verdecm.com to make it simple. And then also I'm digitized_Eric on Twitter. So any of those methods.
So I encourage everyone to reach out to Eric. He's more than happy to have a conversation with you, and I'm confident it would be an insightful conversation as well. So again, to everybody watching, I hope you took some value from this conversation today. Eric, thanks again for being a guest. Until next time, I'm Patrick Camuso, signing off.
Much appreciated.